Chris, hi, good to have you with us. How have you been?
Very good. Thank you, Ashu. Pleasure to be here.
Chris, this is an exciting conversation, right? I've been looking forward to this conversation. I think I'm usually extremely excited about. I think with the selection of founders that we've been making, right? I'm usually very excited about the conversations that we're having, right? Also, the fact this becomes a very important opportunity, interesting opportunity for us to dive through, finer aspects of a business, right? In terms of how is the founder wanting to sort of build that business, right? And find the nuances of taking those decisions, which are very important and critical, right? When you're building for a market like India, right, a large ship, right, that we are in. That's excited about this conversation, right? But before we dive into that, I'd love you to take us through your background. A quick round of introduction would be helpful, and we dive into our session on Qubehealth.
Great. Thank you so much. I've been a serial tech entrepreneur for now a very long time. Built one of the earliest e-commerce companies in India, subsequently a marketing services group. Raised money from some well-known VCs, made money for them, and then in 2013 decided to exit that and then become an angel investor.
Right.
Until a personal tragedy in the family exposed me to the entire healthcare system in India.
Right.
And I felt that this was my time to actually kind of do something impactful and really solve the problem of simplification of Indian healthcare. And
Right.
that's really became that really became the genesis for Qubehealth, and that's what we're doing right now.
Awesome. Chris, I'd love you to take, for us, right, help us understand Qubehealth better, right? I mean, I think there are many things that you're doing, right? But I think more importantly, you're plugging it into the HR of an organization, right? Where you are saying that, listen, we're going to possibly help you, one, understand the risk that you run, right, of continuity, because there are people is a critical component in the entire scheme of things, right? But what you're also doing is you're essentially enabling a lot of these employees within organizations uh, with a capital support, right? For them to go out and basically undertake or basically pay for ailments, processes, procedures, and a variety of things, right? So tell us a little more about the construct of Qubehealth, right? What are the services that you're offering? What's the key proposition?
Sure thing. In simplistic sense, what Qubehealth does is it bridges the gap between what an average Indian household's actual healthcare expense is and what your health insurance will pay for.
Uh-huh.
That's really in the simplistic sense. And
Right.
To elaborate on that, 3 out of 4 Indians actually do not have insurance, or if they do, they are usually underinsured.
Right.
Which essentially means that you have to end up paying from your savings or your borrowings to pay for yourself or any other family member.
Right.
This situation is even more acute when you look at the employed Indian, where most organizations today have some sort of a group medical policy, right? A group mediclaim, GMC as it's known, or group health insurance. But it would surprise you to know that the national average per individual is just about 3 lakh rupees. And as you can imagine, that 3 lakh rupees doesn't really pay for anything nowadays, right? More importantly, it comes with a whole set of conditions that limit the usage in terms of procedures. So a lot of things are not covered. You want to talk to a specialist if you need to get admitted to an ICU for more than 5 days, the price that you pay for a bed in a hospital, etc., etc. And it doesn't cover anyone that you consider family. So typical policies will cover you, a spouse, 2 children, maybe 2 parents. But what about in-laws? What about siblings? What about more than 2 children? What about a favorite uncle or an aunt? Or what about a pet dog? It could be anything, right, that you consider families, right? Or a boyfriend or a girlfriend. I mean, just keeping it as expansive as possible. So from our perspective, what we felt was that the biggest lacuna or the biggest fear for most Indians is, how do I pay for healthcare? It is ironically not, do I get the right form of care? Meaning, am I at the right hospital? Am I talking to the right doctor? That is a distant second and third. The number one is, how do I pay? What we do is we provide that lubricant. We provide no cost EMI, no collateral, pre-approved credit line to employed Indians so that they can have that money available on tap in the form of an app as well as a card that they can go ahead and swipe anywhere across the country and instantly convert that into a EMI, which is called interest free, all the way up to 24 months. That's really what we do.
Very interesting. Chris, well, before we dive into the mechanics of it, right? I mean, and you kind of touched upon this particular point, right? Where you've talked about, how underserved this market is, right? And I think this is a number which is out there, right? And I think while we are one of the fastest, growing economies, right? And a fairly active, agile economy, I think the travesty of the entire situation is they're extremely underserved, right? Right, when it comes to insurance, when it comes to risk in general, right? Risk products in general, right? I'd love to understand the landscape of insurance, right? I mean, given that you're doing this, right, and healthcare possibly, is an extremely critical component in the overall savings spends that you do, or spends from savings that you land up doing, right, because of lack of insurance, right? What is the kind of impact that we're talking about here, right? If you could run me through those numbers, that'd be very interesting.
Absolutely. I'm going to throw a number at you, right?
Sure.
$72 billion a year. That is what the Niti Aayog report of March of this year tells is the
Right.
amount that Indians spent from their savings or their borrowings to pay for healthcare,
Mhm.
right? It's the single biggest reason why Indians fall below the poverty line every year.
Right.
And to put it in perspective, even after 35 years, our country has less than 25% health insurance penetration, which means the majority of people still depend on their savings. I mean, you will work all your life, you'll save the money, and essentially you're going to wipe out that savings to pay for yourself or your family members' healthcare. It's a very common. So borrowing for healthcare is very, very common, right? So
Right.
in terms of perspective, when someone looks at health insurance, unfortunately, even today, it's considered as a tax saving measure. It's one of those things that my own father, when he would speak to his chartered accountant at the end of the financial year, he would say, take a policy so that you can get a tax write-off. It was never, it was never about health risk management, right?
Right.
Now, how do you manage health risk? You must most certainly get an health insurance,
Right.
but by nature of the product, health insurance cannot be 100% coverage, right?
Right.
There is always going to be some conditions. It will not cover some people. It will not cover procedures, and so on and so forth. So therefore, what needs to happen for the rest is you need to have access to really cheap capital.
Right.
It's ironic that today in our country, you can buy a cell phone at 0% EMI, a washing
Right.
machine or a television at 0% EMI,
Right.
but a cataract operation, a pregnancy or a maternity or a cardiac surgery, you still have to pay upfront. So that's
Right.
really the perspective, right? I just want to give you one more perspective.
Sure.
Healthcare is the only industry where the power doesn't lie with the payer.
Mhm.
Think about retail or anywhere else, right? Or hospitality. If you're
Right.
paying, they treat you like God. In healthcare, you have to give the money up front, right? And they still treat you not so good.
Right. Very interesting. Yeah, Chris, you kind of touched upon some very very interesting aspects, right, in terms of how people pay, right? And you kind of talked about borrowing, right? In terms of, and as soon as you start sort of looking at that, right, the contributions that are going towards, say, payment of healthcare, right? Now, these are private borrowings. These are not, for example, institutionalized borrowings, right? Largely because institutions have kind of, if it's not, for example, part of the package, right? Institutions have kind of shied away from lending into that environment, right? And that's largely because, if you're going through a procedure, if you're going through a certain process, or if you're going through an ailment, typically your inability to, or your ability to repay becomes, is could possibly compromise, right? And that's not a risk that I think a lot of lenders in the traditional models wanted to build in, right? Into their, for example, risk stacks, right? In terms of delinquencies, inability to pay, so on and so forth, right? And I think the stats are clearly out there, right? That healthcare inability, healthcare payments could lead into families moving into a bottom of the pyramid, right? Very very quickly, right? And
Absolutely.
that's an important statistics. That's something which has been discussed all across, right? And
Yeah.
thus it possibly becomes a need of the hour to have a scheme from the government, and I think which the government is kind of doing, right? But what I want to understand is the mechanics of this entire thing, right? How do you go about that, right? So when you say
Sure.
that this is a zero cost EMI, right? How do you ensure that this is done right? Also ensuring that there is a lending play to it, right? You're at an intersection of healthcare and lending, right? How do you ensure that it does not necessarily leads into a delinquency and all of that, right? And how do you manage those hygiene factors
Sure.
in your engagement span?
That's a great question. So first and foremost, the reason for impoverishment due to healthcare expenses is
Sure.
primarily because of non-institutionalized credit, which means you borrow from a money lender or you borrow from
Right.
family. And those are the kind of things that actually cause a lot of impoverishment. The
Right.
formal part of lending, which happens through credit cards. I mean, most individuals today, if you have to go to a hospital, they ask you to deposit money while your insurance is getting processed. What do they end up doing? They actually swipe their credit card. And that comes at a cost of 18 to 21%.
Right.
It may not surprise you to know that one of the leading banks in our country in the credit card business pre-COVID was processing 1,000 crores every month on
Right.
credit card swipes.
Mm-hmm.
It may also surprise you to know, actually, that education loans and healthcare loans have the least amount of NPAs.
Right.
because most Indians actually prefer to pay for those kind of things. So what is lacking and why this is not worked out is simply because lending companies have always structurally built their products around point of sale. So they will set up a booth at a hospital or a clinic and so on and so forth, which comes across as desperation financing. Now, in a desperation financing situation, right, that person is literally being told by the receptionist or the cashier of the hospital, "Acha, you can't pay. Please go to the counter and go ahead and sign." Now, in that point of view, you are not thinking anything. You will just sign away anything you can because you need to, get a discharge from the hospital, right? Way we've changed that is we've kind of created a two-sided marketplace. On one side, we've aggregated over 11,000 hospitals, clinics, and diagnostic centers across the country. So pretty much wherever Visa, MasterCard, RuPay is accepted, we are present. And we cover everything from, typical procedures that cover hospitals and clinics, but we also cover emergency procedures such as let's say a pregnancy, assisted pregnancy, skin, hair, dental, eye, veterinarian, if you have a pet dog, and so on and so forth, dog or cat. So we cover all of that entire spectrum on one side. On the other side, we focused on solving the problem for employers so that they can offer better healthcare benefits to their employees. Now, traditionally in India, healthcare benefits has always been seen as group mediclaim. Let's just provide that and we are done with it. But as I mentioned earlier, group mediclaim is inadequate. So a lot of the companies that we work with today, and we're close to 300 companies right now across India, that have actually signed on to Qubehealth by offering a pre-approved credit line to their employees. So now they go out there and say, "Hey guys, your company really cares for your health. Here is a policy that covers you for 3 lakh rupees. But in addition to that, we are giving you a 10 lakh rupee pre-approved credit line. So you never need to be in a situation like you were in the COVID second wave." That's really what we do.
Very interesting. I want to actually, so I wanted to talk to you a little about the credit stack that you built, right? And that relationship that you have with financial institutions, right? But before I do that, right, Chris, what is the sensitivity that you kind of experiencing? And COVID has been an absolutely unreal event for I think each one of us, right? It's touched us at a personal level, it's touched us at a professional level. I think businesses have become more sensitive, right, to the entire cause, right, of ensuring that their human resource is safe, right, but simultaneously the business continuity risks don't really, or this kind of situation doesn't really necessarily paralyzes the operational aspect, and they continue to be a going concern, right? And service their clients, customers at the same district, right? What's that sensitivity? I mean, have you experienced a very different kind of a sentiment around this, right? That's one. Second, are these corporates also contributing the cost? So, for example, I could be a corporate with say about 1,000 people, 1,500 people, 2,000 people, right? Are they also contributing the cost, saying that this is something that we kind of say either underwrite, right, for our employees? Is there a newer way that they are looking at this entire given that this event has happened, right? Are they looking at it with a renewed sense of responsibility? What's your
Very
experience?
pertinent point. Very pertinent point. I think what we are seeing is a tipping point in this entire situation. Pre-COVID, most companies, for them, employee healthcare was just a checkbox. Right? HR teams were told that go ahead and offer executive health checkups for your employees, or go ahead and just go ahead and do some sort of a Zumba class or a mental health session, etc. And they would just organize that out of a feel-good factor, right?
Or a fun Friday.
Fun Friday, exactly, right? Now, a lot of those companies actually, the HR teams got completely blindsided when the second wave hit. And a lot of our own clients were panicking because it was not just the rank and file, but even the CXO level people who couldn't even get basic tests done or a hospital bed. And we've all experienced that, right? As a healthcare company, we've been fully operational since Jan of this year, and me and my team were literally on the phone organizing, all beds and medicines and all kinds of things like that. The good part that came out of it is the realization on the company's side just skyrocketed. And one was the realization, and the other was just the demand, right? Because the employees came back and started asking those tough questions to HR teams, saying, "Hey, look, how are you caring for my health? Now, this is number one to me, right? It's not the HRA, it's not the perks. This is what I want to know." A lot of them also realized that the policies that they had in place were so complicated that when they went to the hospital basically, just kind of told them to get lost. So they went back to HR and said, "Hey, look, this is not as easy as you made it sound. It's too complicated." So realization, awareness, all of that has significantly gone up. And the good part is companies are now building things in place, safeguards in place, right? So how are they doing that? Some of them have actually created an emergency corpus fund out of their balance sheet. Right? Not all companies can afford to do so. Moreover, how can you determine what that amount might be? I mean, let's say you have a 20-30 lakh rupee corpus put aside, and one of your employees ends up borrowing, 1/3 that amount because they genuinely need it. Then what do you do for the rest of those people? So things like that, right? Which is where something like us, kind of comes in. They pay us a processing fee. They, meaning the company, pays us a processing fee. And on the basis of that, we deploy up to 10 lakh rupees per employee as pre-approved credit. So it could be a 30-person company, or it could be a 30,000. In fact, one of our largest clients, we manage 40,000 employees for them across the country. So we provide up to 10 lakh rupee credit line that's available, and that becomes an additional benefit. In addition to that, we provide a marketplace and a lot of the other stuff a lot of the other companies do, from doctor consultations to doing annual health checkups, hospitalizations, give them a price rate, etc., etc. But that's the core of what we do.
Very interesting. I think that's absolutely fantastic, right? I think there's this need for an integrated system, right? And I think, and I can completely agree with you. I think there is definitely a need for having a completely new understanding of how employee healthcare has to be dealt with, right? I think we really can't do with the archaic systems that were there. And you're absolutely right. I think there were a lot of those instances when people were suffering at the last minute, and and they had to go back to the HR when HR were kind of clueless, right, in terms of how do we navigate through the situation, because they possibly, it was like you said, right, a checkbox on on your possibly things to do list, right? They never understood the complexities and finer nuances around a certain delivery, right, that had been made, right? Chris, I'm going to move into a slightly more, slightly important question, right? And this is more to do with, mechanics is something that we discussed, right? But this is something a little more intricate in the sense, something that we touched upon, right? Is the credit piece, where you're extending, a 10 lakh rupee or a 15 lakh rupee line of credit to the employees, right? Now, so two aspects, right? Two questions. One is, I want to understand a little more about your underwriting process, right? And underwriting is something which is very, very critical, right? Now, there are 2 or 3 ways to do it, right? One is that somebody is already eligible for something, you pick that up as a reference point, and then you sort of start to lend on that. That becomes one. Second becomes that you start to, and which is a newer world underwriting, right? Where you're blending a lot of, say, for example, activity data, right? In terms of how is this guy walking, doing, consuming, spending, all of that, into your existing credit model, which is more two-dimensional, right? And then build a certain understanding of the possibility of risk that the portfolio can have, right? I want to understand a little more about that. And second is, what's your relationship with your lenders, right? I mean, is this an FLDG-based relationship? Are they lending on your behalf? What are the responsibilities that you have to sort of service, right, as the channel? I want to understand these two aspects in your
absolutely. Absolutely. Let me take the second question first, right? So we are essentially a distribution platform for the NBFCs that are out there, right? So the credit risk is upon the books of the NBFCs, but why they work with us is simply because, number one, I give them customers, I give them credible customers, because I have all demographic information from the employer. I manage the entire customer relationship and the servicing and all of that bit. I also give them the provider relationship. So as a lender, all you need to do is essentially just manage your book. You do not need to manage the merchant. You do not need to manage the customer. All of that is taken care through us. So which is the reason why actually, we've signed up with 4 different NBFCs at different profiles of risk. And there are more that want to get associated with us simply because of the quality of customers that we have. Now, going back to your first question, the way we do the credit risk assessment is really simple. It's essentially 2 things. Number one, we look at your CIBIL score as an employee, so Aadhaar and PAN card, and then we are able to do a CIBIL score verification. And number 2 is we look at your monthly CTC. Now, on the basis of these 2 pieces of information, the rest of the other stuff, such as how long you've been working with the company, does the company really care for you, and so on and so forth, those elements are more subjective information. But on the basis of these 2 empirical data, we are able to assess your ability to kind of pay back, which is not unusual than any other credit product out there. Let's say you were applying for a credit card, they'd probably do a similar kind of assessment. Right. The way we are different is we actually even cover those people that have got bad credit or no credit, in the sense that they have no credit history whatsoever.
Mhm.
Of course, the limit that we provide them might be lesser. So let's
Right.
say you are a delivery boy in an organization and your salary is 15,000 rupees, and you've never borrowed credit, or you bought a cell phone once and you ended up defaulting.
Right.
You'll at least get 30,000 rupees credit line from us,
Right. Interesting.
right? So that it can pay for some emergency, it can pay for certain things. So
Right.
that's really what we are able to kind of provide.
Very interesting. And I still, want you to answer the first part of it, right? In terms of your underwriting models, right?
Yeah.
Are these underwriting models, I mean, are you bringing in the two models to interact with each other? Are you just giving them the information, right? Eventually, it's their decision, right? Because decision making is something which takes the most time, right?
Yeah.
Um,
Yeah.
how are you doing that, right? Because if you look at any other lending institution, right, and not say healthcare, but outside of healthcare, right?
Yeah.
Typically, what's happening is the relationship is such where, of course, it's a marketplace model for each one of them, right? But there is a lot of underwriting and understanding which is being built at the organizational level, right? And thus, it just makes it easy for a financial institution to, channelize the money faster, right?
Right.
In your case,
Right.
how does it happen, right? How quick is the process of channelizing this money?
Sure. So, in terms of the quickness of the process, from the time the HR gives us data, between 24 to 48 hours, we actually give them a credit line
Interesting.
per
Okay.
employee.
Right.
And since it's a pre-approved line, the employee, they literally download our app, they log in, and they do the KYC, and they're good to go. I mean, they
Right.
instantly they can start using that money.
Mhm.
And the beauty of that is because the fintech infrastructure in our country has already been laid. I mean, there are
Right.
enough companies that are out there, right,
Right.
who have actually used technology in sophisticated ways to be able to kind of get this entire approval thing done.
Mhm.
Once that credit line is available to the individual, it's exactly as an experience. It's exactly
Right.
similar to you swiping a regular Visa or Mastercard,
Correct.
right? So it's in nanoseconds the transaction is approved, and then you're good to go, right? So it removes that uncertainty as well. That's how we risk it, model it, and we do this in association with the NBFC partners.
Very interesting. Chris, what I want to understand is that and this is something that we've experienced, right? Now, healthcare is something which is very unpredictable, right? I mean, you don't necessarily know how much it's going to sort of hurt you, hit you. It's a difficult environment, right?
Yeah.
In that sense, right? And most often than not, right? You land up paying higher than what you anticipated, right? In an environment and in the product that you're providing, right? Is there possibility for employees to can they up their exposure, right? So for example, I'm a certain employee, I'm at say a certain level in organization, I have access to 10 lakhs of credit, as per say whatever uh, you know relationship that has been offered by you with my entity, my organization. Can I up that through the course, right? Is there a possibility? Is there a flexibility around that?
Yes. The simple answer is yes. And the way it happens initially is really simple. Let's say
Right.
there are two earning members in the family, and
Uh-huh.
one of them got onboarded because their employer signed
Right.
up with Qubehealth. For just an additional 450 rupees, they can add another family member who's earning. We'll do the same verification within 24 to 48 hours, and you will
Interesting.
get an additional up to 10 lakh rupees. And it
Right.
can multiply depending on the number of earning members you have in your family.
Interesting.
So you create as a family a unit of ready cash that's available for
Right.
any members in your family. Now,
Interesting.
the other beauty of that is you can pick who the family members are
Mm-hmm.
and add them to that credit line, and that same credit line is available to the rest of the family as well. So think of it like an add-on credit card, right? Now, most of
Interesting.
us would end up having a
Right.
family member with an add-on card. So if you are a person who's living and working in the city, and you have
Right.
elderly parents in a smaller town, you can actually give them that credit line, and when they go for their next health checkup or a
Right.
cataract operation or whatever else, etc., it's paid for. The second part
Interesting.
I want to mention is that point about we end up paying more than what might be.
Right.
uh, we want to remove this whole opacity that is there in the healthcare business.
Right.
Why should it be that if, let's say, you want to get a cataract operation done for an elderly person in your family,
Right.
you have to end up going to those one or two options that your eye doctor recommends?
Mm-hmm.
Why cannot it be that in your city you have 10 different options? You can figure them out in terms of rating, in terms of quality, in terms of pricing, and then actually make that decision yourself.
Right.
Ironically, today you can choose a holiday trip to Goa and you will get multiple options, or
Right.
at restaurants you will get multiple options, but you
Right.
can't do that for these procedures, right?
Right.
And it could be something as simple as, let's say, a LASIK surgery. I'm not even talking emergency procedures.
Right.
I'm saying general basic procedures that one might actually undergo: a LASIK surgery, a cataract, choosing a maternity hospital, for example.
Right.
These are non-emergency procedures,
Mhm.
and you should be able to, the power should be in your hands. You should be able
Right.
to say, I'm going to figure out who has the best rating, what is the price point, and then I will make a decision on that. So we address that as
I mean, if you ask me, Chris, right? I mean, this is something that I've had the chance of speaking with many founders. I've had the chance of speaking with many doctors, right? I've had a chance to speak with many people, who've gone through, uh, not necessarily very happy experience, right? While they were possibly going through a procedure, right? And I think that's largely what you experience, right? By the end of, I think I think going to a hospital is not a happy experience, right? I think
yes.
for most of us, right? Uh, no, but if you really ask me, right? I think I would want that transparency to come in, right? As a consumer, I would want that transparency to come in, right? Where I know that this is possibly this is something that I've contracted. This is A, B, C, D, right? And this is going to be my cost. And there could be a variation, but that variation is predictable, right? I'm not necessarily into an environment which is completely unpredictable, right? I'm being charged for things that shouldn't necessarily be there, right? So I mean, if you really ask me as a consumer, I'd love it to be a little more transparent, right? And I think that's possibly the case for each one of us. Uh, Chris, it could possibly be a little early right now. I mean, given that, it's been a very small run, right, for you. But have you had the chance of assessing the impact that you've been able to create, right? Of course, COVID has been a very definitive event, right? But what's been your sense, right? I mean, is there an impact that you've been able to create on employee happiness, for example, right? Have you had those instances where people have come back to you saying that, listen, thank you so much, right? You kind of saved us in the process, right? I mean, we were not necessarily sure. I mean, have there been instances, have HRs come back to
Oh
you saying that,
yes. Oh yes. I
it's been a
think
good relationship?
if there were good karma points, I think my team and I, would be scoring really high up there.
Interesting.
Interestingly enough, we've all become in our own family and friends network the go-to person to call in case anyone has any healthcare,
I can imagine. Right.
requirement, right? But if I were to provide you empirical data, perhaps a great metric has been that we've been growing 100% quarter on quarter.
Interesting.
By March, which is in the next 6 months or so, we are looking at deploying over $18 million worth of credit. And we will have just scratched the surface
Right.
of, the kind of base. There is so much of latent demand. Healthcare is such a high friction experience. Just by removing the friction out of it, you will be able to kind of enable that. So, yeah, I mean, that's really where we are at.
Chris, one thing that I want to, we're essentially moving towards the end of our conversation, right? But before I do that, right? I mean, typically what happens is in a B2B environment, and this is a question that I should have possibly asked you a little earlier, right? Which is that in the flow of things, right? And this possibly also leads into my next question, which is going to be the future, right? Of how you look at QL. But what happens is in healthcare, especially when you're in a B2B environment, right? It's a decision-taking process, right? There are many stakeholders that are involved, right? And that's possibly one reason you don't necessarily see a lot of internet companies or consumer internet companies coming up in that area, right? I mean, it's just so much more easier to go out to an individual, right? And convince that individual saying that this is what you need, right? In a B2B environment, it just becomes so much more difficult, right? There is hierarchy, there is bureaucracy, right? There is decision making, there is some sort of existing alignments, right? There's a lot of that which exists, right? How's that been for you, right? I mean, how quick has the process been for you? From a convincing standpoint, I mean, are you at a 30-day cycle? Are you at a 50-day cycle? What are the typical conversion cycles?
Sure. So God has been kind to us. We've had almost a 90% hit rate on our sales, and we typically have a 30-day, and all of these are direct sales, right? So, and we work with very large organizations. What has been good for us has been that, and of course, COVID has accelerated it, but we speak to people that care for whose job it is to care for the employees, right? Which is the HR team. And as it turns out, they desperately needed help in trying to decomplicate the very complicated Indian healthcare system. So think of it like this, right? If you were the HR head of a large multi-geography, multi-town, multi-city company, and you're sitting in headquarters, let's say in Noida, what you would do is then have the regional managers go and do a beauty contest of the different providers out there, right? So A hospital versus B diagnostic center. And now you, as an HR professional, have to kind of decipher all this complicated healthcare language and try to evaluate whether what you are providing to your employees is good, is at the right price, and is the most reliable. Simple thing like a health checkup today a lot of companies would just go to some of the well-known labs or hospitals, and
Right.
they will sell you what is known as a silver executive package or a
Right.
gold executive package,
Right.
right? And the HR would say, okay, well, in this much price, I will get 50 different tests. But those tests are not relevant to the female population in your organization.
Right.
Or they are not relevant to a particular age group and above. Now, who does
Right.
that? I mean, nobody is able to kind of decipher that, right? So we've been able to kind of decomplicate it. So simplifying Indian healthcare has been the number one thing that we've been able to do for HR teams.
Right.
Number two, what we have been able to do is give them one price, lowest price guarantee across the country. So they don't have to pay differently for Delhi and differently for Maharashtra and differently for Tamil Nadu. It could be, one of our clients is in Midnapur in West Bengal and another one is in Zahirabad in Telangana. Right. It's the same price across the country. They get one invoice and we give them a price guarantee that if you find anything cheaper, we will match it. Number three, we are able to tech enable the whole thing. So all of the employee engagement is through WhatsApp, our app, and this and that, everything kind of put together. And that ensures that essentially for the HR, it's like pass on the headache to Qubehealth, and let me just be done with it. So as a result, we end up having like 30-day cycles of sales. And, we've been growing really rapidly. God has been kind.
Super. Chris, what are the next 2 years like, right? And I would want you to break it down in two layers or two levels, right? One is, are we going to see a B2C play, right? And I think that's always exciting, right? To go out and convince an individual, right? Visibly doing it large corporate, something that I kind of, you kind of answered in a way, but there's always a temptation as a founder, as a promoter, right? You want to acquire those customers much faster, right? You want to see, how is my number sort of, how's the ticker doing on a daily basis, right? How am I performing, right? So this is always an itch, right? That's one, right? And second, from a tier 2, tier 3 standpoint, I mean, you kind of touched upon this, right? But what's the plan on tier 2, tier 3, right? Given that we're a very large nation, we're a large ship, right? Which is and we have many markets, right? Healthcare is a problem when you look beyond urban India, right? I think it just becomes so much more severe, right? And third, what are the numbers going to be, right? From a business standpoint, right? Now, what are the next 2 years like? Would love to understand that.
Sure. So, in terms of going deeper into India, we are already present in 753 towns/cities across the country. And that has been a day one, a mission for us that we have to go deep. And I'm pretty sure that at the same time next year, we will probably quadruple that number.
Right.
Wherever Visa and MasterCard is accepted in the country, as long as there's a credit card POS machine, we will be present. So that's the first thing, right? In terms of, where we see ourselves in the next year or two, essentially, we want to be the new way to pay for healthcare.
Right.
And, we expect to dominate that particular space. And even after 5 years, based on our projections, we are looking at roughly about 2,000 crores or something in top line. We will just be 0.4% of the entire out-of-pocket market. So there's a long way to go. We are literally straining at the leash in terms of, going out there and acquiring more customers. B2C play for us. In a way, we are not in a way, we are actually a B2B2C company at this point, right? So we enter the relationship from the employer side, but we actually service the individual. And through that individual, we service the whole household, the family. So for us, it's about focusing on those households and providing a fantastic, delightful B2C experience, addressing that point you mentioned earlier about, why should there be disappointment when you're going for healthcare consumption? It should be a frictionless experience. If I'm able to do that really well, if you come back to me same time next year, I can then give you a more specific idea on when we are going to be mass market.
Interesting. And I'd love to hear about Bharat, right? I mean, you kind of touched upon that, but I think the way you're possibly doing it is different, right? I mean, having your existence in those markets is very different, right? Where you are actually out there, you are possibly offering your solutions to a lot of SMEs and MSMEs that operate out of the market, right? Is there a plan around that, or is that something that you possibly take it in a step, a little later, right? And that could possibly also, you could talk a little about, your, the funding, right? Because, I mean, touching Bharat, right, could be a fairly expensive process, right? Because there is no point of reference per se, right? I mean, healthcare is something that they've never understood, in the way that we are possibly talking about here, right? In the Qubehealth way of things, right? If you could tell me a little bit about that, I think it would be very good.
Sure, absolutely. So Bharat, building for Bharat is very, very important, and it's core to
Right.
what we do.
Uh-huh.
And therefore, from our perspective, we are focused on building distribution with SMEs and small
Right.
companies. I mean, we do companies. While our average size company is about 1,000 employees,
Mm-hmm.
we do companies that have got 10 employees as well.
Interesting.
So for us, we are absolutely non-discriminatory as far as the size of the enterprise is concerned.
Right.
The beauty is when we go and sign up the small hospitals and clinics in the small towns,
Mm-hmm.
in addition to them getting signed up to us as partners, they actually sign our service on for their own employees.
Mm-hmm.
Right? It's bizarre because when we went and started signing them up, they would close the deal and they'll say that, listen, can I get the credit line as well? And I'm like, you already work at the hospital, right?
Right.
So they say, yes, we do, and we get discounts, but we still have to pay from our pocket.
Right.
So that's the other bit, right? The other important part about going deep down into Bharat is essentially communication.
Mm-hmm.
Communicating insurance has always been tough, which is the
Right.
reason why it's taken so long to kind of penetrate this stage, right?
Right.
Because Indians don't understand the idea that you pay for potential risk,
Right.
right?
Right.
So a 3 lakh rupee policy on a group mediclaim is probably costing an individual 6,000 rupees a year, right?
Right.
About 500 rupees a month. What we go in there and say, pay 333 rupees and you get up to 10 lakh rupees of pre-approved credit line per year,
Right.
right? And it's no questions asked. It's much more simple. They're like 28
Right.
rupees a month that I'm happy to pay. And
Right.
that pricing is very intentional so that it is available. It's essentially building for Bharat, right? 28 rupees, anybody should be able to. He could be a Mumfali wala who's actually selling on the street. He can afford to pay 28 rupees a month to get that credit line. So that's really essentially.
Super. Chris, I'd love you to touch upon the funding, right? I mean,
Yeah.
you've been there, right? You've been a founder, right? You've built businesses, you've raised capital, right? Tell me a little more about that, right? And the sensitivity with which you are raising capital, right? Your future rounds,
Yeah.
right? Because I think between a first-time founder and a slightly more seasoned entrepreneur, right? I think there's a difference, right?
We
Tell
made
me
a
a little
lot
more.
more mistakes.
Tell me a little more about that.
Yeah, so I think the healthcare is the flavor of the season, no doubt. But
Right.
more importantly, the investors that we already have, and we've just done a pre-series seed round earlier this year,
Right.
because we've built a business that's been capital efficient. I think the one realization that one gets from having been an entrepreneur earlier is how to use cash in a
Right.
very, very effective
Right.
manner. So we have a very low burn rate. We manage it very judiciously. When we raised our pre-series A, we were just 9 employees,
Right.
and yet managing over 150 corporates across the country. So we've just been a lot more capital efficient, right?
Right.
But having said that, we will be closing up our Series A bio before December of this year. So we've already kicked that process off. We've got a tremendous interest from some very well-known brands. So fingers crossed. We'd love to work with them. Our criteria is to actually look at the color of money.
Right.
Investors who can take us deeper into Bharat. Investors who can actually bring something to the table that is beyond
Right.
just capital. That's really what we're looking at.
Interesting. That's a very interesting point that you highlighted. But I'm going to reserve that one for possibly our next conversation, right? In terms of that role and that understanding and that perspective that investors can bring to the table, right? But like I said, right, I'm going to reserve that for our next conversation, right?
Sure.
Chris, my last question, right? I think team is very, very critical, right? Now, you've been, like I said, right? You've been a serial entrepreneur. You've been into angel investing, right? You're running Qubehealth. You're kind of scaling it right now, right? Team is the most critical constant, right? Is how I sort of see it. And I think that's something which is constant across. I think each of my conversations with each of the founders, right? As a founder, right, and you're in a very unique position. You bring in a lot of those perspectives, right? How do you, or what do you think are the critical pieces, right, to getting the right team in order, right? Because that's something which is going to survive you across all the cycles that you see, right? And they're not necessarily all great cycles, great times, right? Post-COVID, things start to normalize, right? We're going to see a very different kind of time, right? And this is something which is not just, say, true for you, but this is something which you've experienced, right, across, say, while you're evaluating businesses, while you've been investing in businesses, when you've been, doing it your own, right? It's a very difficult one, right? How do you sort of align them to the same goals and all that, right? What are the hacks around it, right? If you were to give a piece of advice, right, to many, many founders who are going to watch this, right, what will that be?
Wow. I'm still learning, but I can share a bit of my insight here. So first is in Qubehealth. For us, it's not the number of people, and it's the type of person.
Right.
So there are a few things that we follow, right? Number one, we are focused on building a special ops Navy SEALs kind of team.
Right.
It takes a bit longer to find those people. We are not in the business of building an army.
Right.
So those special ops guys, they have a certain X factor about them,
Mhm.
and that X factor could be, life and how it's treated them
Right.
in the past, right? And certain other things that they have. So when we are
Interesting.
interviewing people, when we are meeting people, we always try to think about and ask them questions that lead us to that.
Right.
Tell us something about you that is not in your resume.
Right.
Right, it could be a failure, it could be an experience, it could be whatever, right? I mean, it
Right.
could be something. One of our successful sales guys actually is a professional bass player in a jazz band
Wow.
that actually regularly plays in China.
Right.
That is weird, right? And that is insane for us, right? One of our engineers is a 19-year-old prodigy who intentionally chose not to go to Kota and not to go through the whole JE
Mhm.
experience and so on and so forth, because he's been, kind of building products right from day one. And when I interviewed him, he said, I can rebuild the Swiggy app in 24 hours. And,
Wow.
so we try to look for people with X factor. It
Right.
takes longer, which is where it can cause impatience because you're really trying to build this entire thing out.
Right.
So that's our way of doing it, right? But every company has their own model. But the key here is it's all about the people. And I'm
Right.
sure every entrepreneur, I'm not saying anything new, every
Right.
entrepreneur will say this. It's the people assets that matter because they walk out of the door every night and you hope to hell they show up the next day morning.
Right.
So that's really what we do, and what we're trying to build here.
Chris, it was an absolutely phenomenal conversation. I mean, there are, and I have this feeling, right? By the end of each conversation, how I want these conversations to keep going on, right? Because there's just so much of intelligence, right? Executional intelligence, right? Which I'm a big fan of, right? I think those finer nuances, right? That you have to sort of choose from day in day out, right? And like I said, how do I want these conversations to keep going on, and keep understanding those finer nuances, right? Because one, we're a very large country, right? And I think solving for that requires uh, extreme sharpness, right? And I think I've enjoyed all of those aspects across my conversations, right? But I'm gonna save a lot of that for our next conversation, Chris. We wish you
Sure.
all the way best. I think
Thank
there's
you.
something incredible that you're doing. I think that is the need of the hour. And we wish everybody health, happiness, right? And everybody's adequately covered, right? Through the course of their journeys, right? And I think with what you're doing, you're possibly enabling a lot of that, right? We wish you all the way best, Chris. Thank you so
Thank
much
you.
for taking the time. It was
Thank
a
you for
pleasure to
having
have
me.
you with us.
Thank you. Thank you so much, Ashu.